You are listening to the Critical Mass Radio Show, Orange County's business talk show, focused on exploring topics of interest to CEOs who are leading middle market companies. With your host, Richard Franzi.
Hello, you are listening to Orange County's longest running business talk show. And yes, I am your host. And thank you for being on the show today. We have an exciting show planned for you. Why, you ask? Because Mark Hebner is our guest. He is the founder and CEO of Index Fund Advisors. Mark, welcome to the program.
Thanks, Rick. Excited to be here.
So let's go back in time just a few years and talk to us. I love it when I have founders like you on the show. What was the original inspiration or motivation that you had to create this company?
So come March, it'll be 26 years. We just celebrated our 25th anniversary last year. And so we're pretty proud of that. Something like half of businesses don't make it through the first year, and 95 go away eventually. But what started this company was I had a friend who passed away, and the widow went about 2 or 3 years and then finally called me and said, you know, all of my husband's friends said they would help me with their with my investments. And every time I call them, they're all too busy. And you're next on the list. Would you help me? And I said, wow, I'd really love to do that. But quite frankly, I just finished my MBA program and I know something, but I'd like to brush up on this a little bit. So I went down to Fashion Island to the old Barnes and Noble store and started pulling investing books. I pulled about 20 books out of there and took them home and started rifling through them and reading them. And to my shock, I discovered that managers don't beat markets, markets beat managers. And when that's the case, you rather just buy a market, which is constructed through an index, right? Like the S&P 500, and you buy and hold it. And if you have, a dozen indexes, for example, you want to rebalance them, make sure your allocation remains relatively constant over time. So anyway, after I finished all that research, I called her up and I said, listen, the last thing I want to do is take advantage of a widow. I'm going to send you a book I read that I really liked, and I want you to read it. She's a college educated woman. She took the book on a couple trips and came home and she says, wow, I love this. She says, let's go. So that first year, I put all my money in. She put all her money in. I owned the company and we took off from there. That was 1999. And today we have about $5.4 billion as of year end 2024.
Quite the story. That's thank you for sharing your origin story with us.
Sure.
So what have you learned over those 25 plus years since you founded your company?
So, early on, I wrote this book because I really wanted to solidify what I'd learned and also to boil down the some 20 books. By that point, I probably read another 30 books. I wanted to summarize those and try to do a better job than what I had seen in all these books. And so in constructing that, one of the first things I learned is that I think very few people are aware of the fact that when they're buying stocks and trading in and out of the market, they are basically gambling. And so when I Googled, what do stock market gamblers do? It took me to the New Jersey website where there was a whole section on stock market gamblers, much to my surprise. And so what I've learned is that this trading, much like sport betting today, that's so easy to do on your phone, and stock trading that's so easy to do on your phone, has become one of the addictions of the day. And if you go read the Gamblers Anonymous material, people get a little high every time they trade. When they buy, they sell. It's sort of what they call an action, where it's stimulating to you. And so what I've learned is it is an addicting activity, and then people can't let go of it. They love it, and eventually it whittles away their capital.
Wow, that's an interesting perspective. And so let's talk about index fund advisors, because it's right in your company's name, right? Your
Yes,
investment philosophy. So
thank you.
just
Yeah.
give us a little sense for that.
Well, as I mentioned, we have 5.4 billion in assets under management. That's large for
Mhm.
these relatively small, independent registered investment advisor firms. That's kind of the classification. We're not like Schwab or
Mhm.
Merrill Lynch. We call those broker dealers. We're advisors, and we focus on just selling advice. So we have no product that we're tied to. We're completely independent of product and even trading fees. We don't get any of that. So that allows us to have our interests aligned with that of the client, right? It's almost like I tell them we're on the same side of the table looking at the universe of both investments and strategies with those investments. Do we buy, hold, rebalance? What do we do with those? And we're here almost like your coach, if you will. We're your advisor. And so we do that. We have 11 investment advisors, 55 employees, and we're also unique in that most of our advice is posted on our website, ifa.com. And as the result of that, we have a lot of clients that have come to us from all over the country. When you look at the map of where our clients are, there are dots almost equally. Where more dots where there's more population, but they're spread across the country, and it's very different. Most investment advisors are obtaining clients through referrals and through lawyers and accountants, and they're concentrated right in their local markets.
That's interesting. I believe in this idea of content marketing, which is put as much information on your website or your social platforms to educate
Yep.
prospects and clients as you can, and that attracts people to you. And it sounds like, Mark, that's exactly what you and your team are doing.
I called it pay it forward, right? We're investing an enormous amount of money to put out this material. We have a documentary film. I have a book. We have 83 charts that we update constantly on our website. We have hundreds of videos, hundreds of articles, 2 documentary films. And so that content, I think, first of all, allows the prospective clients to become educated. And then once they become educated, they're more likely and more interested in hiring us to assist them in trying to achieve their investment goals, which is mostly to retire, pay for a wedding, pay for the education or college for their kids or grandkids, all these things that we save for. And the retirement, of course. Yeah.
And all of that is getting increasingly more expensive. I have
It
adult
sure is.
children, and a lot of my clients have kids that are in college or about to go to college. And to hear what they're being asked to pay for these various educations, it's
really
unbelievable.
gone through the roof. I mean, I think it was going up 8% a year for college for a while. Maybe that'll back off as some people say, hey, I just can't afford that.
Right.
And then they were giving them money through these loans, and now they got to deal with that mess.
Yeah.
So yes, it's an issue.
So I see that there's a comment by Scott Sussman, and I'm going to bring it to the screen. Thank you, Haley. It asks if you're familiar with a company by the name of edn.com from more than 20 years ago. I don't know.
No, it
Not to
doesn't
put you
ring
on
a
the
bell.
spot. Okay. Well,
Sorry, Scott.
thanks. Yeah, thanks, Scott, for asking the question.
Yeah.
I'm sure there's a reason why you ask it. Feel free to make a comment, and if it's appropriate, Haley will bring it to our attention. Okay, so you mentioned your book more than once.
Did I?
You did, and I was
did I
excited
do
about
that?
that.
No.
I don't know. I think we should talk about it because
No.
There you go. It's in its 12th edition or 10th edition. Excuse me.
10th edition, 20th anniversary. So 20 years ago, I wrote the first one, and I kind of took the lead of Burton Malkiel, who wrote the very famous book, and maybe one of the most famous books about why people should index their portfolio, called A Random Walk Down Wall Street.
Mm-hmm.
And what Bert has done is he just keeps updating this book, keeping it relevant, because the message really hasn't changed much. You can't beat the market. You can't pick stocks and doing better than the market. You can't time the market. You can't choose a mutual fund manager. We call it manager picking. And you can't also decide what style of investing is the best one to be in at any point in time. So a lot of people say, oh, it's a good time to be in small caps. It's a good time to be in large caps. Get in those growth stocks, get in those value stocks. None of that works because of what's known as the random walk theory. And, basically in the efficient market hypothesis, which says all the information and all the forecasts relevant to that information are already in the price. And as new information arrives, the price immediately adjusts to that new information. That keeps prices fair so that buyers of those securities, stocks or bonds, are positioned to get a fair return, which is based off the risk of the investment. And so the speculative activity that most people want to do and most professionals want to do has a 0 to negative benefit. It's negative because of the costs. Most people say, hey, this is overvalued, get out of it. This is undervalued. This is a cheap stock. Load up on it, back up the truck. That's all nonsense because you got 10 million people, right? Roughly 5 million buyers, 5 million sellers every day. And there's no better way to get to the fair market value than to have a seller and a buyer and then do it about 10 billion shares a day with 10 million people. And that's why we have free markets. So we have this system, which is actually what economists call a price discovery system to get us to these fair prices.
So 25 years ago, did you imagine, Mark, this is where you would be with this opportunity that this widow gave you?
It's funny, probably like all entrepreneurs, my business plan called for even more assets by this time. And I'm very grateful and very proud of what we have created. But quite frankly, I expected that this evidence was so strong on the benefits of indexing, low cost, low tax, capture the market return, just some of the basics, that I just thought everybody would want to do it. Today, it's about 50%. They crossed the 50% line of those who are buying index or ETF funds that are based on indexes. But the problem is they're not holding them, they're trading them, especially ETFs. So the message has gotten out there, but it's not as much as I had anticipated 26 years ago.
We don't have time today to talk about, but I'm wondering how your message resonates with millennials and Gen Zs who tend to...
Not good. They want to gamble. They want crypto. They want hot stocks. Most people do. And that's the addictive nature. Because of the addictive nature, they're lured into this. The short term is they want quick riches. And risk doesn't allow you to grow money quickly. It grows money slowly.
So I wonder, you're giving advice there, but I'm wondering if there's another piece of advice that maybe somebody gave to you, a client, a mentor, a partner, somebody that you could share with us, a piece of business advice?
Well, business advice is kind of tough. So I had one good friend that, focused on the fact that you needed to get the best people in the right job. And if they're not the right people for the right job, get somebody else. So I think that's a good piece of advice. The other one was somebody early on told me I should write a book. She had written a book to help develop her business and add credibility. And so I engaged in that difficult task. It is brutal to write a book, and especially if it's subject to SEC review, because it's almost like a marketing piece for our company when I write it. Okay. So that was another important piece of advice. And as I talk to clients today, it's always interesting to hear them say, hey, I bought your book 20 years ago and it's still here on my shelf and I love it. It changed my life. The last step of our book, and maybe this is a good way to almost wrap up here, I think we're getting close, is the last step is to invest and relax. And what it does is it takes the stress out of worrying about what's going on in the market every day, because you own the whole market all around the world, and you're just sitting there basically collecting what we call the cost of capital of the firms you invested in. So that's a little tricky, but on average, the cost of capital of large firms is about 10% of the year if they were to go borrow the money, or that's the return that they have to make available to shareholders. Otherwise, shareholders don't want to invest in them. So that's a whole nother concept of economics, that the cost of capital of the company is the expected return of the investor.
So things change in a lot of different industries. Yours is no different. I'm wondering about your view of artificial intelligence, how you see it impacting your space. Are you leveraging it in your firm? Can you talk a bit about AI?
So, yes. So first thing, people think that AI is going to help them pick stocks, help them outsmart the market. And we like to remind investors, and actually I asked Grok this on X, that the market is the ultimate AI, because it includes these opinions and forecasts of tens of millions of investors. And even that is not published on the web and other sources of information for artificial intelligence. It might be a feeling, it might be their own ideas about what AI means to NVIDIA, for example. Okay, but the collective wisdom, we call this, of the entire market exceeds even that of AI. Now, other than that, we have found AI useful in searching for information. It helps us summarize information, helps us quickly get to information. And so that's been helpful. But the SEC, who governs our industry, is very concerned about investment firms using AI and coming up with content that may not be accurate, and therefore providing misleading information to clients and prospective clients.
Yeah, that's in a regulated field like yours. I'm sure that is that's a challenge for the SEC to figure out how to regulate that. I am sure.
I asked AI about myself one time, and they came up with a book I never even wrote. They just made it up. I'm going, wait a minute. So it's certainly better. That was maybe a year ago.
Yeah.
But you do have to be very careful about what it generates, and review it very carefully.
So what's the future hold, Mark? Where are you taking index fund advisors? What's going to be different? What's your vision for the future?
Well, we're going to continue to improve the quality of our content. We have a creative director actually out of London who's helping us do some really high quality interviews of people who we think are important for our clients to hear about and learn from. And he's been interviewing people from all over the world that are in this business and writing books, much like you're interviewing me. And then we post those on our website. I think maybe, I don't know exactly how many years, but we can get this firm to maybe 10 billion in assets. We're, just over 5. And, it's what they call the snowball effect. The bigger you get, then that compounding becomes more and more valuable. 10% on 5 billion is 500 million, where if you only have 100 million, it's what, just $1 million. So 10 million. Anyway, so as the company gets larger and larger, the return just provided by the market becomes more and more valuable in your growth. And so we do see that we still have a lot of clients coming in, but we also benefit from the growth of the market. And because we help our clients do better, that improves our own business, because we work on a small percentage of those assets that we manage. That's how we get paid.
If someone would like to connect with you on LinkedIn, or maybe find out more about your firm, how would they do that?
So I'm assuming they can see my name there. Just put a T in the middle. There's not too many Mark Hebners, but I think there's a couple other out there. So Mark T is in Thomas, Hebner. My wife says that stands for trouble, by the way. Anyway, Mark T. Hebner. And you can also look up Index Fund, that's with singular, advisors, Index Fund Advisors on LinkedIn and Instagram and Facebook. We're pretty much all over the place.
Yeah, it sounds like from the way you've described your website too, it's a great repository for people who want to learn. That's probably a good place for them to go to capture your information. What if they want to buy your book? How do they get your book?
Amazon, just click away, right? You can go to our website or just search Index Funds Mark Hebner. Comes up. The name of the book is just Simple Index Funds. And there's a subtitle there, the 12-step recovery program for active investors.
I guess the recovery part ties to the addiction that you were talking
That's what
about,
it is.
really.
Yes. Yeah. Just like Gamblers Anonymous, but I kind of recrafted my own 12 steps just around the concept of them, but then I relabeled several of them. It's basically an education of what you can't do and what you could do in the market. Can't beat it, and you should just index it, in short.
Well, there you go. I want to thank you for your time today. I thoroughly enjoyed the interview, and I appreciate you giving a bit of your time to our audience.
You're very welcome. And thank you, Rick. Enjoyed being with you today.
And thanks to the audience. You've been a part of Orange County's longest running business talk show. This episode joins our catalog of over 1,500 shows that we've done over the years. And if you happen to be, like Mark, an Orange County entrepreneur, or maybe you're leading a nonprofit, and you would like to share your story with our audience, then reach out to me on LinkedIn. I'm Rick, R-I-C, Franzi, F-R-A-N-Z-I. Let me know that you have an interest in being a guest. And between Haley, our producer, and myself, we can get you ready to be on a future episode of the show. And until the next time we have a chance to be together, I hope all of your business decisions will move your organization in a positive direction.